Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about cues for trade, what to watch out for today, and of course, all the stocks that are in focus this morning, including the likes of Tata Motors, Torrent Pharma, and a whole host of other counters will be in news. And of course, we'll also be getting all your stock-related queries answered by our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed, and we will try and take them up. But before we go any further, as usual, let's take a look at the top headlines at this hour. Wall Street ends lower as bond yields rise ahead of the US Fed's interest rate decision. The central bank is expected to hold rates steady, but guidance on future action will be keenly watched. Asian markets kickstart the day on a subdued note ahead of the Fed policy outcome. Meanwhile, China keeps benchmark loan rates unchanged. GIFT Nifty, meanwhile, is hinting at a gap down start for the Indian market, adjusted for yesterday's holiday. Oil prices ease after hitting a 10-month high. US oil output expected to fall for third straight month in October. Brent hovers around the $94 a barrel mark as supply concerns persist. Among stocks in focus today, watch out for Torrent Pharma as reports suggest it may be in talks with Apollo Global for $1 billion fundraise for its bid for Cipla. Tata Motors, on the other hand, has raised CV prices by up to 3%, and Kabel will be making its D Street debut today. Reliance Jio launched the Jio Air Fiber on September 19, that is yesterday, on the occasion of Ganesh Chaturthi. In fact, Jio Fiber has been launched across 8 Indian cities and plans start at 599 rupees. And Canada expels top Indian diplomat alleging an Indian link in the killing of Khalistani leader Hardeep Singh Nijjar. India rejects claims, calling them absurd and manipulated, sacks senior Canadian diplomat in retaliation. Canada also issues a travel advisory against travelling to Jammu Kashmir in India. Well, let me then first bring on board our technical expert for today. Joining me is Vaishali Parekh of Prabhudas Lilladher. Good morning, Vaishali. Great to have you on the show. On Monday, we saw some bit of a cool-off from record levels. Do you expect, the weakness to continue today as well, given the fact that, the global cues are fairly muted, subdued, and you also have, the GIFT Nifty hinting at a gap down open. So would you expect the Nifty to take support somewhere around 20,100 levels, or do you expect it to go lower and perhaps look at a 20,000 in today's session?
Very good morning, and thanks for having me on the show. But yes, I think market has been a bit sluggish since a couple of days. So I would say I would be a bit lenient in my support levels. I would look at 20,000 levels as support, and below that even 19,900. So there is no panic till 19,900 levels are taken care of. So yes, it is a weak start. It should be a weak start, but 19,900 should act as a crucial support level.
All right. And what about the Bank Nifty? PSU banking index has been on a tear. But the Bank Nifty, if you look at, in comparison with PSU banking index, it has been an underperformer. But would you expect levels of 45,000, 500 or something like that on the Bank Nifty? Or do you think it'll continue to be under a little bit of pressure, given the fact that we've seen weakness in the likes of HDFC Bank and some other private names?
So right now we are seeing on the daily chart, it is, showing double top formation. So Bank Nifty really needs to move past the previous high of 46,300. Most of the weightage comes from the banking stocks. So yes, I'm expecting a sluggish move even in the banking stocks.
All right, expecting a sluggish move on the Nifty Bank. Hold that thought, Vaishali. We'll come back to you and talk about specific stocks and, of course, also take up viewer queries that are trickling in this morning. But let me also bring on board Preeyam Tolia, who's, senior research at Axis Securities, joining in. Good morning, Preeyam. Great to have you on the show. Let me first get in your thoughts on the entire FMCG pack, given the fact that, we've seen a lot of sectors, lead from the front in this leg of the bull run, but FMCG has not been one of them. And there are concerns of El Nino conditions building up. We've seen weakness in the likes of Nestle, HUL. Where do you expect the FMCG pack to head from here, given the fact that there are certain headwinds going forward?
Yeah, hi, good morning. Definitely the FMCG pack has not performed well versus the entire market. So there are several factors, like you had highlighted that in terms of the El Nino. how in the month of August, we could see that the rain was not there, right? So there, the demand is likely to, delay, especially in the rural. Also, in the recent month, that crude oil prices have also has changed up, right? So the crude oil as a raw material basket is meaningful for the companies, right? So there could be some pressure going ahead, not in the immediate basis, but there could be some pressure in going ahead because the companies are not will delay the price decline, right? So it will impact the overall volume. So we expect that at least in the near term, the demand environment is likely to remain volatile. However, in recent commentary from the managements, also from our checks, suggests that the rural demand has not improved, but at the same time, it has not deteriorated, right? So it's a good sign. But we expect a gradual recovery in the volume growth from at least in the second half of FY24.
Right. Let's talk about Dabur. The street is turning bullish on this stock, given the fact that it had its capital markets day last week, and it has, of course, highlighted the fact that it will be looking at premiumization as well as scaling up of existing brands going forward. And double-digit growth is something that the street is penciling in. What are your own thoughts on Dabur? There were some brokerage reports as well, and some of them see a 16% upside on the stock from current levels. But with a 12-month perspective on the stock, do you expect the double-digit growth to come in, and perhaps maybe this stock is looking a little better vis-a-vis its peers in the space?
Yeah, so last week they conducted the analyst meet where they highlighted the entire path of going ahead, what they are likely to do, right? So they are going to launch products in the adjacencies. They are entering into the new categories in the full-fledged, particularly in the baby care products, right? So yeah, the thing around Dabur is showing some signs of improvement. However, in terms of the performance, all these initiatives will take time, at least, right? So it is not that in the next quarter we will see the numbers for this initiatives, right? Also, we need to understand that the rural accounts for 50% of the Dabur sales. Unless and until the rural doesn't recover, we expect that the Dabur is likely to, be in the sideways, at least in the terms of performance, at least in the medium term.
All right.
So unless and until the rural recovery doesn't happen, the entire FMCG pack would be, including Dabur, HUL, will likely to be in the sideways.
All right. Let's talk about HUL in particular, given the fact that, the volume picture going forward is likely to remain muted. It obviously reported the low single-digit volumes, like 4.5% or thereabouts in the quarter gone by. And the street is also penciling in somewhere similar, volume growth likely to be similar around that level. And street is also not very bullish on HUL, given the kind of brokerage reports that I've been reading. So vis-a-vis ITC, how is HUL looking right now? Do you think it's, one should have an ITC in their portfolio and not perhaps look at HUL at the current juncture, wait for some bit of recovery to kick in and then look at HUL?
Yeah. So even we thought, we think the same for the HUL. We are looking for some sign of improvement in the demand, in the meaningful recovery in the demand. So for that, ITC would be better play at this current juncture if one wants to play the FMCG pack, where the growth is visible in terms of top line as well as in the bottom line, right? Also in the valuation terms, ITC still is not that expensive. After the correction, still it is less expensive compared to the other FMCG peers. So yeah, ITC looks more attractive compared to the HUL.
All right, ITC looking more attractive at the current juncture. But let's also talk about some of the paint companies, Preeyam. We've, of course, seen that Grasim, has come out with the name of its brand for its paints business, which is expected to be launched in the last quarter of this fiscal. We've seen Asian paints come under pressure after that. But, of course, there's been the crude factor as well that's weighing in on the paint makers, right? But do you think that paint companies may have to sacrifice their margins, in a bid to protect the volumes, and perhaps this could impact the profit pool of the industry? So in that light, would you say that Asian paints should be an avoid at the current juncture?
Yeah, definitely. I think there will be more downgrades for the paint sector as of now because there are several factors. The Grasim has launched their products. product. And also at the crude oil prices are now hovering at around $95, $95 per barrel, right? And 60% of the raw material accounts for the raw materials for the paint is crude derivatives. So yeah, at this current juncture, we believe that the paint industries are likely to remain under pressure unless and until the crude oil prices come down. However, we believe that the larger paint companies are likely to lose market share compared to the smaller players, right? Because if there is any 2% decline in the market share for the larger players would be meaningful compared to smaller players. So we believe that the larger players are likely to remain under pressure, at least in the near term.
All right, that's the view on some of the paint companies. With that, Preeyam, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Well, with that, let's go back to Vaishali and talk about specific stocks. Vaishali, I want to talk to you about Torrent Pharma, given the fact that, it has been in news with respect to its bid for a promoter stake in Cipla. Day before yesterday, there was some news that it was approaching more private equity giants for funding. And, yesterday we had news reports saying that it has approached Apollo Global for $1 billion, to borrow up to $1 billion to fund the Cipla bid. If you look at the stock, hasn't really done much over the last 5 sessions. And even on a monthly basis, it's down somewhere around 5%. Do you think, this could remain an overhang? The competition with Dr. Reddy's for the stake buy will remain an overhang on the stock? And what are the kind of levels you're expecting in the current, in the coming weeks for Torrent Pharma?
So actually, if you see chartically, there's really nothing much happening. So unless and until the stock moves past 1900 levels and sustains about it, I would expect a bounce, maybe going towards 1960 and 2000 levels. But the other view would be that if it breaks 1800 levels, 1840 to be precise, it would call for a further profit booking. So let's wait and watch. It needs to show us some clarity only above 1900 levels.
All right, expect some clarity only above 1900 on the charts. But let's also talk about the hot brokerage call of the day today. It's on HDFC Bank. Of course, the MD and CEO has got an extension of 3 years from the RBI. But there have been concerns on the asset quality front, after the merger, given the fact that HDFC Limited's non-performing loans are a little on the higher side. We have, all the brokerages maintaining a buy rating and an overweight rating, but the target prices have been slashed to just a little above 2,000 rupees. In fact, in some cases above 2,100 rupees or thereabouts. Even Jefferies has cut its FY24 estimates by 3% after the RBI's move to, implement or, move to announce the incremental CRR. That is something that could take an impact or could have an impact on banks' margins also going forward. If you look at HDFC Bank, I mean, as I was mentioning earlier as well, that PSU Banking Pack has done extremely well, whereas the private banking stocks haven't really, have a lot of catch up to do. So, with respect to HDFC Bank, do you think the overhang of the merger could continue for some time? And, it is a bit off from its 52-week highs. Would you expect the bank to stage a comeback in the next 2 to 3 months going forward, chartically?
So actually, chartically also, this bank has really not done anything. So I would say it would be a buy at every decline with 1550, 1530 as support levels. Because right now we saw a pickup coming in. There was a technical resistance coming at 1640, 1650 levels, and that's what we are precisely watching. So I would say, well, let's not lose hope. 1550 should act as a good support for a long-term positional trade also. And maybe once we see a clarity above 1670 levels, we would be seeing the higher targets. So I would not be shy of buying this bank.
All right, buy on dips perhaps looks good for this stock. But let's take up some viewer queries that are trickling in this morning, Vaishali. The first one is coming in from K. Naga, wants to know your thoughts on Easy Trip Planners. He wants to know whether he should hold or sell. Stock has been on a tear. I think over the last 5 sessions, it has gained somewhere around 12.5%. In fact, on Monday's session, it gained in double digits, 11% or thereabouts. But with competition coming in, in the form of Yatra, IPO is, I think, closing today. There could be some competition, or perhaps the stock could come under or a slight bit of pressure going forward. But for people who are holding on to it, Would you say that, hold on to it for a bit more time and perhaps look at what Yatra lists at and then exit, or would you say it's time to book partial profits in this counter now?
No, in fact, the stock has shown us a run up after a very long time. And the fact that it has given a gap up opening and sustaining with high volume, I think it gives another story. I think if we see the previous high move past, I think one can wait for a target of at least 48 to 50 levels for now.
All right, wait for levels of 48 to 50 on the stock. Hope that answers your query. But let's take up the next query. Quite a few queries coming in on some of the PSU banking names. We have a query on SBI as well from Jawahar Selvaraj, and we have a query on Indian Overseas Bank from Vasuki. Both of them want to know your views on that. SBI, I think in the PSU pack, you could call it an underperformer, but the likes of mid-cap banks like Indian Overseas Bank, Indian Bank, UCO Bank, these stocks have staged quite a stellar run-up. So would you say it's time to stick to mid-cap PSU banks now, or would you say SBI is a good buy and wait for the outperformance to kick in going forward?
I would shift. Actually, most of the PSUs, most of the mid-cap banks and all have given us a tremendous run-up. So now the new buying opportunity, of course, lies in SBI, because after a very long consolidation, it has come above 600 levels. So I would say that this would be a buy with support of 580 for a trading target at least of around 630, 640. So SBI looks attractive to me at these levels.
All right, that's the view on PSU banking pack. But let's take up a query on the hotels side of the market, right? Siddharth Jain wants to know your thoughts on Indian hotels right now. Hotel shares have been on a tear, Vaishali, be it Indian Hotels, Lemon Tree. And of course, it will only pick up pace given the fact that we have the World Cup coming up. And that could mean brisk business for some of these hotels. But on the charts, Indian Hotels, Lemon Tree, how would you place some of these stocks now?
So yes, Indian Hotel looks quite good at these levels. 410 should be the support for a new buy. And I think as a position trade, this is very likely to go towards 440. Even the long-term trend is very much intact. So along with the other hotels, Lemon Tree, Chalet, Oriental Hotels, this is the frontline stock. So I have a bullish view on this.
All right. Bullish view on the hotels pack and particularly Indian hotels. But let's take up a query on JSW Steel. In fact, Jindal Steel, not JSW Steel. Pankaj wants to know your thoughts on how to approach this stock. Now, if somebody's already bought shares of Jindal Steel, should they continue to hold, or would you say if there's any bit of an uptick, time to book some profits?
So actually, technically, we were very positive on this stock right from 630 levels, and the target resistance was at 720, and that's what we really saw. So I think there is scope for some profit booking coming in. I would say that either hold with a trailing stop loss or partial profit booking should be a wise move.
All right, either hold or look at booking partial profits. But we every day we get queries on the defense pack. Vaishali, today's no exception. We have a query coming in on BEL, and this one I think is coming in from Som. Wants to know the long-term view on the stock. I mean, these stocks have been on a tear. In fact, if you look at the last 5-6 months, some of them have even doubled or tripled for that matter. So BEL, time to sit tight and perhaps buy on dips.
Well, I would say the stock has really run up, and I would say as long as 135 levels are held on, there is scope for this stock to go towards 150 to 170 levels. So that would be my view. But if 135 levels are broken, then I would change my view. So my view is for now positive on BEL as well as BHEL, but the support levels need to be taken care of.
All right, watch out for support levels on some of these defense names, including BEL. But let me shift focus to the telecom pack. We have a query coming in from Deepak, and he wants to know your thoughts on Tata Tele Services. But if you see the likes of, Vodafone Idea, even that stock saw a very good run-up last week, even though Monday it came under a bit of selling pressure. So for the short term, would you advise looking at some of these telecom names, given the kind of pop that we have seen in the last 1 month or thereabouts?
So I would say, well, of course, if it's with a trading strategy, one needs to follow strict stop loss. So I would say, Vodafone is a good level to accumulate even now. But for that, one needs to have a strict discipline, and the stop loss would be at around 9 rupees. And at the same time, for Tata Teleservice, we are seeing a positive move coming in, and the stock has been running up since quite a while. So, well, now 90 should be the support level to aim for a target of 120. So, yes, overall telecom is picking up.
All right, overall telecom is picking up. But let me ask you a query on Happiest Minds. This one is coming in from Vignesh, wants to know your thoughts. Stock has been fairly, I think there's no clear trend emerging when you look at the 5-day or 1-month charts, Vaishali. So if somebody is invested in this, Happiest Minds, what would you advise them to do?
Well, it has been consolidating, as you rightly said. So I would say it is just not giving any clarity, but 905 is the support level. And unless and until this stock moves above 970, 980 and sustains above that, we would be confirming an upward move going towards 1020, 1050.
All right, just a couple more queries. I want to quickly squeeze them in. This one is coming in from Yagnesh on HUL. In fact, I just had a chat with Preeyam on the prospects of some of these stocks. But if you look at these stocks from a trading perspective, HUL, how would you advise investors to look at this? Would you say that it's the right time to buy into it, given the fact that the stock hasn't really done much in this leg of the rally, but perhaps wait it out for a recovery and hold it for a couple of years?
So actually, I think the worst is over. Chartically speaking, on the daily chart, we have in fact recommended this stock to our clients for an accumulation strategy. I don't see the stock in a regular going market. Breaking this stock would not break to 2400 levels. So with a stop loss of 2370, we are asking our clients to accumulate from these levels, because we have seen a good corrective move right from 2700 to now 2480. So it looks attractive to me right now. And even ITC, I would say that yes, accumulation should be the strategy, because long-term trend is very much intact. 440, 420 is the crucial support level. So accumulation should be the strategy for FMCGs.
Right. I think the last query today, Vaishali, would be on PVR. This one is coming in from Hemant. Of course, we've seen new movies release and get very good audience reaction. In the case of Jawan and Rocky or Rani and all that. But the stock, speaking about the stock, it hasn't done much over the last 5 sessions. It has in fact come off quite a bit, 4% or thereabouts. Would you advise investors to now buy into this on these dips, or how is it looking on the charts? Are the long-term trends intact, given the fact that we can expect quite a few big-ticket releases going forward in the festive season?
So I would say chartically, the stock has given us a one-way move right from 1350 to 1880 levels and on. So for now, this is a regular corrective move. Our crucial support is 1650. So as long as 1650 level is kept intact and we see an upward reversal coming in, I think it's ready for a new round of momentum.
All right, watch out for levels of 1650 on PVR. That wraps up our query segment for today. But Vaishali, before I let you go, any stock recommendations for our viewers this morning?
I would be looking at auto sector, and I like Mahindra & Mahindra and Tata Motors. So we are waiting for the day opening, and let's see how the day starts. But these two stocks are on my radar for today.
All right, stocks from the auto space on Vaishali's radar. With that, Vaishali, thanks a lot for taking out time and joining in this morning, and of course answering all our viewer queries as well. Well, with that, we are completely timed out on this edition of Morning Trade. But just a reminder for our viewers that we have Kabel that's listing at 10 a.m. today. Of course, watch out for this one. Analysts are expecting a 10 to 15% premium over its issue price. But with that, it's a wrap for this edition of Morning Trade from me, Nandita, and the entire team that put the show together. Thanks a lot for tuning in, but stay tuned because coming up next is Opening Bell.